Hello, everyone. Today is June 15th, 2026, just over 2 weeks, actually less than 2 weeks, before the online trading event that I will have the honor of hosting on June 28th, 2026 at 8 o'clock p.m. UTC plus 2 Paris time. Sign up, you'll see, you won't regret it. Today it's a training video. We're going to analyze some markets together that I have pre-selected. We'll start with gold, as you can see right away. We have a gap, a visible price gap on the daily chart, so you can also see it here on my market profile. There is much less liquidity than at other price levels. Let's switch to the 15-minute chart to see concretely what's happening, knowing that this is a commodity that isn't traded on higher time frames. For those who have been following me for years, for my best students and others, you know it, I'm very fond of this. Higher time frames because they are more relevant, because they provide institutional levels. But it must be said that gold is a rebel, gold is independent, and it's a commodity that moves much faster than other assets. So most of the time you have to keep an eye on it, on the 1 hour, 30-minute, 15-minute charts, etc. So you can see it here. As I just mentioned, we have a gap here, a price gap that's also visible on the market profile. So what can we conclude from this? You should know that gold is an asset that will only go up ad vitam aeternum. There will be corrections, just like we're seeing right now. We can see that there has been a huge correction in the price, and that's completely normal. But fundamentally speaking, it's a commodity that, I repeat, will rise. However, when you have a gap, you should know that the gap will be filled 9 times out of 10 in the markets. So be careful. If you're trading gold this week, keep an eye on the gap. There's a very high chance that it will be filled. And why not after that see the price move back up? All right, that's really the theory. I'll say it again. You can see it here, the quotation proof, because it's extremely important. So it is likely that we're probably going to actively search for liquidity to drive the price action even higher. I shared a plan with you last week, which didn't happen. I didn't even enter a position. It wasn't a loss at all. But I was waiting for a breakout above a high point to go after the all-time high. That's still the case. I'm going to wait for us to break through this major trend line, this big correction, as you can see from the price action. And then we'll go after some more significant levels. Now, you might wonder why I keep repeating this point. Because as you can see, by looking at the chart from a fundamental perspective, we're clearly in a specific type of market environment. It's bullish, that's perfectly normal. And right now we're in a descending channel, a descending flag, call it whatever you want. Not a continuation pattern, but a reversal pattern. You should know that flags, pennants, channels, and so on are reversal patterns. They mark a pause in the trend. But there will be a continuation at some point. You'll see, we'll talk about it again in a few weeks if you want. The price will obviously have reached a new ATH, a new all-time high. That's completely normal. And we're simply going to keep an eye on what happens. So that's the plan for Thursday. Never start your analysis from the 8-hour, the daily, or whatever time frame. Really start from the 1-hour chart to get an overall view of what's happening in the market. If needed, you can go down to the 15-minute chart. For now, though, things are still very clear. We can see it here. Too many quotes. We can also see here that there's a lack of liquidity, so we'll probably go after it. You can see it, by the way, without a market profile, this kind of thing isn't visible. It's still a tool that's extremely interesting. We're going to start by taking a closer look at EURUSD, which I actually shared with you in the free Telegram channel. I shared a detailed trading plan with you there. So, as I told you last week, indeed, we are in a range. Here is a range that has lasted. It has been quite a long time, since June 23rd, 2025, so we have seen a full year of ranging on EURUSD. That is also why you haven't seen much trading, or the trade setups, however you want to call it, during this year, because we are currently in a trend that is still quite indecisive. In the long term, we are in a range. In the medium to short term, we are in a downtrend. So, 2 possible scenarios. You can see it here on my market profile. There is a lot of volatility here, a lot of liquidity and volume. We are looking for a continuation of this channel. We will retest this level and then move back up. As I just told you, be cautious. Flags and channels are reversal patterns. So you can indeed trade the trend in the short to medium term. That's not a problem. However, aim for realistic targets. So if, for example, we sell around here, you can actually see that we're rejecting the level. You just need to look at the candle here. I pointed this out to you a few days ago. You can see it here. We're rejecting the level. So goodbye. What will happen if we sell is that we'll target this level here. Be careful, we could then break out of the channel and move back up. And I actually think that's what's going to happen to break out of this range. which has been going on for an entire year now. It will take either a major fundamental event or a very massive technical correction. Let's take a look at USDN. USDN, for now, as I was saying, we're still in a very choppy market. Fundamentally, you just have to look. It's pretty obvious. For now, personally, I'm going to wait until we break, obviously, this high point. That seems pretty clear to me. For those who didn't see it, you really need to get yourself some glasses, honestly. We're going to wait a break above the high point to confirm a new bullish trend. So the high point will be point A. Point B will be the retracement. And then point C, which will be the impulse. In any case, if we want to look for buys, if now we want to sell, we'll wait for a break below this low point here. So as we can see here, there's a small area to keep an eye on. I'll draw it for you. It's still not very easy to spot. The market structure has drawn us an approximate low point here. All right. It's the most recent low point that we should observe this on the lower time frames. So we will get to that in just a few moments. And the main goal here is, once again, to target the low point found right here, which corresponds to a key level on my market profile chart. We will wait for a clear breakout and a retest before we go after that target point. And I'll show you this on the 8-hour chart. It's a bit clearer. You can see it here, so we're in a huge range. Once again, the range is completely legitimate, since the euro-dollar is also ranging, but in the opposite direction. This is how you should analyze the markets in a simple and effective way. USD-CAD, I drew up a plan for you last week, so I need to clear the drawings, of course, each time to make it as clear as possible. I was telling you that I was waiting for a continuation of the bullish structure, and that's exactly what happened. You can see here, we've broken the high point. And if we were to buy, we will wait. We are looking for at least a 50% Fibonacci retracement level to be reached first. Consequently, we will wait for the price action to pull back into this specific area before we target the previous high point. Right now, I won't be looking for any sell opportunities. However, if we were to consider taking a short position, we would have specifically looked for a clear break of the most recent identifiable low point on the chart. Here, this low point corresponds to the most recent low. The objective here is quite simple. We are looking for a breakout right. For now, it's safe to say there's not much to do on USD-CAD except look to buy. USD-CHF, I shared the plan with you last week. I'm still monitoring it. As you can see, look, there's a lot of liquidity here. So it's not impossible that in the coming days, you might see a bullish continuation as I've drawn here. We'll talk about it again. We'll see. I think it's something that's going to happen. But of course, we still need to find an optimal entry point. But as we can see here, we have an area that is extremely interesting. And if we then look for a buy, we will target, I repeat, first of all, the high point here, which corresponds to more or less the area on my market profile, an area of very high liquidity. We can see that this is the most traded, the most sought after area at the moment. And then possibly we will target this high point here. As I often tell you, please don't set an ego-driven target. It is better to take your profits whenever you can and try to maximize your gains most of the time. Now, looking at Euro NZD, it is the same thing with two scenarios. We had a fake out, which was a false breakout on the trend, so we're looking to buy just like this. Sell like this, bullish continuation or bearish continuation will target the levels on the market profile. Last currency pair I was watching last week, indeed, because it matched the trade I had taken on NZD-JPY, the famous trade with the 1-to-12 ratio. You see, it's bouncing here. In fact, we could have even bought if we wanted to. For now, at this moment, I'm staying away from this market. So it was definitely possible, I repeat, to buy right here. Why? Because it actually matches the 100% level from the Fibonacci retracement. So if a clear entry point appeared on the lower time frames, it was very interesting to take a position here. However, this isn't the kind of position I would personally prioritize. Why? Because once again, we're currently in a huge range. If you take a step back and look at the big picture more. So I took my sell right here. That was enough for me, and that's already very good.